One thing that will set any funds or ETF apart is their yield and their performance. So by judging from these numbers, we can see UMAX pays about 13.82% and HUTS pay about 7.89. But not only yield that will determine whether you should go with this or that, right? There's more to it. And so today in this video, I'm just going to compare between Hamilton Utility Yield Maximizer ETF, which is UMAX, and Hamilton Enhanced Utility ETF. Ever since this fund UMAX came out, I was always wondering what's the difference between this and this one. So this is something that I dig deeper in and trying to figure out what it is so I can make this video for you. So we look at a highlight of this fund. First of all, we'll start with a highlight of UMAX, attractive monthly income yield of 13.82 monthly distribution. Diversify exposure to Canadian largest utility, pipeline, telecom, and railways. Dynamic overcall strategy to enhance monthly income and reduce volatility. Option strategy, actively manage. This fund is good fit for an investor who wants to get a higher income, of course monthly. Blue chip Canadian utilities, tax efficient distribution, and reduce volatility from option. When you look at the Hamilton Enhanced Utility ETF, it's pretty much exposure to 12 dividend paying Canadian utility, telecom, and pipeline. So kind of pretty much these ones here, but modest 25% cash leverage to enhance yield and return. So we'll see the difference between this one here. You can see here, this one does have leverage. So that means it's an index that follows, it's an ETF that follows an index, but also they use some 25% leverage on cash that they have to enhance dividends, right? Versus this one here, it does not use any leverage. It just use monthly writing and selling call options. I will look at this one here. A yield, of course, is 7.89 currently, and pays monthly. Same as selective Canadian utility service high dividend index TR, which is 1.25, has outperformed the S&P 500 capped utility index by 2.9%. So who is good fit for? Of course, the stable, consistent dividends from relatively defensive sector, enhanced yield and growth potential, favorable tax treatment of Canadian sourced dividends. So we'll see the difference here. You see here they said stable, consistent dividends. Why there's no stable, consistent dividend on this particular fund? So we'll look at the difference here in a bit. And again, by the way, if it's your first time, just make sure you subscribe, because on this channel I always talk about this type of funds and compare between the two, so that will make your process of choosing any type of fund or an investment easier. And if you like my content, just make sure you also give me a thumb up. Thank you very much. So investment objective between these two funds, we can see here UMAX is designed for attractive monthly income while providing exposure to a portfolio of utility service equity security, primarily domiciled in Canada and the US or United States, to reduce volatility and augment dividend income. UMAX will employ an active covered call strategy. UMAX does not use leverage, so that's a very important. UMAX, it does not use leverage, where this one here does use leverage. When you look at this one, of course, the fund objective for this HUT, the investment objective of HUTS is to replicate to the extent reasonably possible and before the reduction of fees and expenses at 1.25, because they use 25% leverage. Time multiple of rules-based utility index, currently selective Canadian utility service high dividend index. So right off the bat, first of all, the difference here, we can let's cap the difference between these two here. First of all, this one pays, of course, 7.89 dividend, this one pays 13.82. They both pay monthly income, same as any other of UMAX ETFs. The difference, we look at this one does not use leverage, this one uses leverage. And the other main difference, this is covered call option writing, versus this guy is only, it follows index, and they use the leverage to extend, because just index itself, it doesn't pay 7.89, but because they use leverage, they'll be able to pay that 7.89 dividend. So that's the first thing we look, and then we look at the second thing will be performance. when you look at the chart here, UMAX, there's no really these guys, Hamilton, they don't really provide a chart when it comes to performance itself. But of course, we just see 13.82 and we can see 7.89. But we look at the index performance versus high and high yield. We look at this is the index performance. We look at the index itself has performed about 9.6. This is the index that this particular ETF is following, right? The index has returned about 9.6 annual return, and we look at the S&P, because this one, of course, it has returned more because it uses leverage. This one here is just S&P TSX capped utility index. This is an index that it's Canadian index where it does not use leverage, and the return right now we can see is only 6.7. When it comes to yield, we can see HUT has HUTS right here. It pays about 7.89, but we look at the regular index, which is TSX capped utility index, only pays 4.79. Again, why they'll be able to pay that one is because they can use that 1.25 or 25% leverage to enhance that dividend, and that's why it's called enhanced. And this one, because it maximized, because they use dividend cover call rating. So what makes UMAX different, right? Many cover call ETF write an option on 30 to 50% of the portfolio out of the money. UMAX is able to provide higher monthly income with a dynamic cover call strategy, currently writing option on 50% of the portfolio at the money. So they only use 50% of the current holdings versus now you, and then of course 50 is left for growth. This allows UMAX to generate a higher option premium while maintaining 50% upside potential, right? We look at the sector allocation, right? So we look at the communication service, it takes about 22%. This one does not have any telecommunication. It has telecom, but it's only like a 25, so it's more than this one. This has industrial. This one does not have industrial. It has pipeline, and it has utility about 48%. So 50% of this particular fund is only on utility, versus this guy, UMAX has about 24% in industrial, and utility is only 30%. So, and these are the stocks. If you can see, they're pretty much kind of, or they overlap. There's some stocks here, for example, BCE. There's a BCE here, Fortis BC. There is also Fortis BC. TELUS Communication. There's there's TELUS. So most of these companies, they're pretty much the same. It's just the way they define which one is which based on their index. So we can see this one has about 12, and this one has also 12 underlying stocks. They use this stock, of course, directly to write calls, and of course they use this stock to follow the index. That's the difference. Again, all Hamilton or ETFs actually are available for purchase or on your broker, and the main exchange is Toronto Stock Exchange, and you can use your RSP, TFSA, RESP, FHSA, or DSP, all the type of accounts you can use to buy any of these type of funds. We'll look at the ticker symbol is UMAX, and this one is HUTS. We look at the exchange is Toronto Stock Exchange. Inception date, this year, and it was June 14, 2023. This has been around for a little bit longer, since September last year, so it's been more than a year, this guy here. We'll look at the investment style. This is covered call, and this is an index. That's the difference. There is a difference between covered call and an index. Asset under management, of course, UMAX is more popular, has about 130 million, and when you look at this one, has only 30 million, so it's very small. And we look at the current yield, of course, this is 13.82, this is 7.89. We look at the distribution is monthly, both of them pay monthly dividend, and rebalance, when it comes to rebalance those funds, because we know they're all equal weight. As you can see right here, you can see almost they are pretty much almost equal weight, and the same as this one here. See, they're all 10, 10, 10, 11. So to rebalance back to the asset mix that they are designed, they will do that semi-annually. So look at the management fee is 65, and this is 65. Risk rating is medium, and medium, we know, of course, utility, they are very low risk, and so they're pretty much medium. But of course, they're more riskier when it comes to increase when there's interest rate increase. Of course, utility always have have a hard time. So, but utility of course do very well during recession. So if the recession coming, these two funds will do great. Let's look at the distribution here. Distribution, this one has been paying in distribution for a long time. So remember there was a term they use here, stable and consistent dividend from a relatively defensive sector. So the difference between this capital call rating, sometimes they do cut dividend. I mean, not cut, maybe sometimes actually they change the dividend. So instead of 175 they might pay 165 at one point, but so far there hasn't been any cut or any changes in this. And again, whenever those happens, I always update you on that. So just make sure if you haven't subscribed, you subscribe and follow, because whenever they are changing dividends and everything like that, I usually let you know. So we look at this, you see here it's about 175. They've been paying since of course August, and they pay in August and September. This one has been paying for since October 2022, because the fund itself came on incepted was on September 1st. So look, it's been paying about 0.079 cents since then, and there's no any changes. So it's very consistent, and it's going to continue that way because it's an index, and of course they use the dividend that they receive from these stocks here. You know, all when these stocks pay dividend, they use those dividends, because we know most of these stocks pay higher dividends. So they use the dividend from these ones to pay you, and of course they add that 25% leverage to add more. So that's where you get that 7% versus only 4 to 5%. So when you look also, I mentioned here performance is not really great when it comes to their chart. They didn't provide a great chart here, but we look at, we can go to Yahoo Finance and see exactly what it is. So this is Hamilton Utility maximizer, and this is of course Hamilton enhanced utility ETF. When we look at year to date for now, this one has turned about -7, so it's lower because utility, we know interest rate has been increasing, and utility always get hurt during that time, and right now it's 7.40 down. But when we look at this one, I've done a calculation on this one. Right now it's 15. There's no much change between 52 week is 14.97 to 16. So at this price today, with the dividend, it will be about 15.61 altogether. So 15.61 from 16 where it was right here. The difference is only about 3%. So this one has outperformed UMAX has outperformed HUTS. So which fund would you pick between these two? This is conclusion from, based on my opinion, I believe UMAX is winner. The reason why it's winner is because first of all, they use 50% of their portfolio to write calls, so they don't use all of the portfolio, and that leave you a room to grow. And the the other thing about UMAX is because the performance has done well so far when it comes to performance, and because that performance of course is being compensated by the high yield, and of course this fund is bigger. It has about 129 million, so there's a lot of money. I mean, people invest in this one, there are a lot of people trust on this one, versus this one has only about 35 million. So because of this reason, a high yield performing well and having the rest of the stuff all the same, I would actually go with UMAX. So now you know which fund. If you only have to invest in this one, you definitely go with UMAX. But if you really want a consistent, you don't need to more stable and a little bit consistent when it comes to dividend, this one probably will pay more dividend, but it doesn't guarantee that it's going to perform well than this one. So end of the day, I would go with UMAX because I believe it's better fund than HUTS. There you have it. That's all for today. Bye bye.